Happy Friday, everyone. It is Friday, the 22nd of August, 2014. It's 8 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. A lot happened overnight, mainly in Ukraine. The Russians are saying that the Ukraine is delaying delivery of humanitarian aid. Aid convoys starting to move towards Luhansk. Warns against attempts to halt humanitarian missions. And then following that, the Russian convoy entered the Ukraine with approximately 90 vehicles without permission with unchecked contents. The Red Cross confirms they are not accompanying the aid convoy and does not know what's in it. And then recently here in the last 10 minutes or so, Poroshenko, the president of Ukraine, came out with a statement saying that the convoy was approximately 100 vehicles. Russian defense minister plans 2 large military exercises this year. So on that Ukraine news, there was a large drop overnight. It came across in the S&P as a 7-point drop to the overnight low to 83 from 1990. So pretty serious risk on the market according to that move. So we'll keep an eye on that. That's the key news item for the day. Fed's plots are a hawk, and a voter is concerned that the Fed is not adjusting policy in an appropriate way and not reacting to data as it changes. Prefers to hike sooner and more gradually. Does not see a material underutilization of labor market resources. Israel confirms they killed 3 senior Hamas military leaders in an airstrike. So they're under a ceasefire that's not really a ceasefire. I'm not sure who they're fooling there on both sides. U.S. Secretary of Defense Hagel says U.S. military action in Iraq is not over, exploring all options, expecting new offensives from militants. And then this morning, about 15 minutes ago or so, Fed's Bullard says sticking to late Q1 2015 forecast for Fed rate hike. Fed's Plosser came out and says the Fed needs to change guidance. And Fed's Lockhart says first rate increase is expected to come in mid-2015. So the market's going to pay attention to that. The day ahead, as far as the daily economic releases, we have nothing on deck today. However, at 9 o'clock Central, Fed's Yellen is to speak on labor markets at Jackson Hole. And then at 1:30, ECB's Draghi is expected to speak at Jackson Hole as well. So you need to keep that on your calendar and remember that that's coming out. A lot of the reaction to the FOMC move on Wednesday was taken back because there was some chatter from Fed watchers that Yellen's coming out with something that's a little bit more positive than the FOMC minutes indicated. Let's look at yesterday's action. By the way, just while I have you here, if you're watching this on YouTube, I'm sure you are, please be sure to hit like on your YouTube page for every video you watch. This is not just for me. Apparently, if there are enough likes in sequence, the broadcast gets upgraded to 1080p by Google because of crowd interest. So right now we're broadcasting at 720p, which seems a little fuzzy maybe. I'm not sure how crisp it is. We might have already been upgraded to have an HD symbol here on my screen that I haven't seen before. But if you like the broadcast or like every video, heck, if you go back and like prior videos, if there are enough likes, we get pushed into a new service of a small group of people on Google Hangouts that where they're allocating more bandwidth for 1080p quality broadcast. All right, so you should be seeing my screen. This is how we did things yesterday. Essentially, rip-roaring higher since last week. Very strong trend. Not the not a pal to the shorts here. So this is the continuous push up. As we can see here, the point of control has shifted up continuously, accepting the market's accepting higher prices and trading at them quite a bit. Volume is pretty poor. But overall, let's look at yesterday. Let's run it through from the beginning, just like you guys have requested. So what we have is a market that opened at 1985, just on the edge of the range. Poor high left behind on Wednesday, so the expectation is that that would be taken out. Very quickly, the market took out the that high by 2 ticks. There's a tendency to take things out by 2 ticks. We have a very clean opening swing here at 86.50 down to 84, and then the market breaks higher, pushes to 89, and then comes right back and crosses through the opening swing. So we expect a lower low now with a target of 83.50 and then the value high of 83. So as long as the value high of 83 holds, we expect higher highs. And what it did is, it pushed down to 83.50 and it found buyers at 83.50. Big swing up. To me, that swing down was 5.5 points, with the swing up at about 4.75 points, or 5 points. To me, this looked fairly bearish when it happened, but then that was all taken back. So the mid short here was a losing trade. Pushed to 89.75, 90, and then the market just continued to just chop up all the way up to 92. 92 saw some pretty good selling here, a pretty good tail left behind, just a couple ticks, but still there's very little volume trading at the high or next to the high when delta selling came into the closes we've seen over the last few days. The market was unable to test the value area high before buyers step in and take out the prior range. Again, for new highs, choppy afternoon trade with VPOC ending up at new highs for VPOC, new all-time highs for VPOC, 1989 even and out of range. Normal variation day, so we have the IB low is formed here at 83.50. We broke the high and we moved slightly higher. Point of control right at the IB high. So normal variation day, very low volume at 670,000 for the day session. 670,000 contracts for the day session. That's approximately half the normal, what we'd consider to be the normal volume for the S&P's day session. Price action is one-time framing up, as I show you in the 15-minute, but we could see it better in the composite here. One-time framing up, very strong, no pauses in the high volume areas, which I find very odd and is a concern for the quality of this bull. This reminds me an awful lot like January, February of 2000. Delta selling on the close again. Auction remains aggressively bullish without a counter auction to test prior balance area. So as we look at this, we keep pushing higher without a clean test of prior ranges, prior acceptance, and we just motor ahead and push higher and higher and higher. Not exactly a healthy auction. This is a concern for the stability of this trend. Okay, and then on the overnight, so the overnight session overall pretty dead Asian session as we've seen. And then here's the news at 4 o'clock in the morning on the Russian convoy. The market drops from 1990 to 83 in one bar, and then the Ukrainians announced that they will not attack this convoy, but they consider it a violation of international law to enter the territory without their permission, and so the market immediately moves into safety and out of equities across Europe, and the market then discounts that information, comes right back to the scene of the crime, 1989.75, dropped from 1990, and has been holding since. This is an impulsive move on news, so I don't consider it don't expect it to follow the same rules as a standard technical impulsive move. This looks to me like a corrective move is coming. I expect a rotation higher from here, back towards the overnight tape. So instead of just reading this stuff, I'm just gonna show you my TraderByte notes. I do one of these every day, so this is what I'm preparing and reading off of. This is part of my prep. I have this for the TraderByte, and then I have a much bigger sheet for my daily notes on daily prep notes. Quiet open overnight, dead session, and then as I said, large drop 90 to 83. Market immediately recovers back to yesterday's VPOC and is steady. Odd profile, as I'd said, it's kind of an interesting. Look at this profile shape, very strange. Let me move this out of the way here so you can see. Odd profile shape. And then this is the first time, the first overnight session since 8/12, since last week, that we've had a lower low on the overnight versus the day session. This is the first time we've had that in over a week. Not sure what it portends for today's session, but this is wetting up. Key areas above 2000.5 measured move, 2001 quarter measured move, 2005 measured move. Below us, 85.75 prior high of year, 79.75 MCLVN, 71 quarter MCVPOC, and then we have a 70.75 to 69 even gap zone from left behind from earlier this week, and then 67.50 MCHVN and naked VPOC below. I'm not going to get into the bottom of these. The primary hypothesis, the market has not rested at all on this run since last week. Rest was anticipated on Wednesday. We didn't get that. Today it's opening in the point of control area. Let's see if that's true. So it's opening just below the point of control. It's dropped a little bit since I took my notes. Early indications are the ES will likely use today to rest. However, Jackson Hole is in place, so headline risk is high. Yesterday's high looks strong and likely to open OAIR and range. Quality of the down rotation versus initial up rotation is important early on to show which side is more interested. Drop below 86. So drop below 86, likely to visit the overnight low, and then we'll target 80.50 if that happens. Neutral hypothesis on the open. I just don't see a higher probability of one thing on another on the over another on the open. However, intermediate, long, and short-term trends are up, so you have to go with that. Secondary hypothesis: brief open, test lower before continued buyers step in to push through to 91.50, which is the overnight high. The 96 or 97% probability. A break of 91.50 continues uptrend for likely test of 97 even on the 97 area. Additional headline risk: Jackson Hole. Key speakers all day long. The Ukraine convoy, the Israel-Palestinian ceasefire, that breaking down into another war, and then the Iraqi militant retaliation. So there's a thing out there that says that they will attack any and all U.S. persons or interests anywhere in the world. So we'll see what how that works out for them. Friday reminder on risk. This is the day when most people get caught into a choppy afternoon and with no chance to recover. I want to remind you, carrying that kind of a painful loss into the weekend's not a fun thing. Today is the kind of day where you just need to be patient enough to read what it's actually telling you as opposed to trading what you feel. We're not in the business of trading what we feel. Um, it's a good day to assess where you are on the week and to realize that it is summer trading and it's patience is key. Um, so this is important for you to just step back and let the market tell you what it wants before you stake any of your hard-earned cash on the market. Okay, I don't care if your account's up 200% or 400%. That's still money that you've earned and have paid for to earn, and it just makes no sense to give it away just because you've made it. The other thing is, surprising news comes out all the time. So find yourself a good news source, news feed, or something to stay in touch. It has been driving, news has been driving the market. If you have questions about recommendations and so forth, you could just write to me on my website, futurestrader71.com/contact. Finally, a reminder for state traders, we have our Ask a Question webinar at noon Central today, and we'll go over the pop quiz and further plans. I'll leave you with that, and I'll catch you soon. Good luck and good weekend. Take care.